Welcome back to MarketSnap, your daily rundown of the market's biggest moves. Today was a session where the bulls finally got some breathing room, but one stock's monster rally nearly stole the entire show. We're talking about Oracle, which ripped over 9% higher, and it's easy to let a single name hijack your entire market red. So we're starting there, then zooming out to see what the rest of the tape did while everyone was distracted. It was a risk-on Monday, with the major indices shaking off last week's volatility to kick off August with serious momentum. The catalyst? A surprising shift toward diplomacy in the Middle East, which sent oil prices tumbling and gave investors a reason to step back in. But as we'll see, the move wasn't uniform, and the cracks beneath the surface are worth paying attention to. Let's get right to the scoreboard. The Dow Jones Industrial Average surged over 1.3%, adding more than 690 points to close near its all-time high. The S&P 500 wasn't far behind, climbing 1.5% to finish just shy of the 7600 mark. But the real star was the Nasdaq, which ripped 2.1% higher as tech led the charge. The Russell 2000 also joined the party, up 1.7%, showing that this rally had some breadth to it. And the VIX, it slipped below 16, a sign that the fear trade is cooling off, for now. The S&P's move today is a classic example of geopolitics driving sentiment. The index gapped up at the open and never looked back, holding its gains into the close. But here's what's interesting. The rally was powered by a handful of mega-cap tech names, and beneath the surface, the tape was a bit more selective. The Nasdaq's 2% pop is a big deal, especially after last week's choppy action. Semis and software led the way, with the index reclaiming key technical levels. But as we'll discuss, the AI trade is still very much in flux, and today's bounce doesn't necessarily mean the coast is clear. Now let's talk about the movers that made headlines. Oracle absolutely dominated the session, surging over 9% as investors piled back into the AI infrastructure trade. Vertiv, the cooling and power specialist, jumped nearly 9% too, while Boeing added 8% after finally getting FAA certification for its long-delayed 737 MAX 7. Meta was up 6%, Dell gained nearly 6%, and CrowdStrike added 6% as the broader tech complex caught a bid. But it wasn't all green. AstraZeneca plunged nearly 7% on news it's exploring a massive merger with Bristol-Myers Squibb, a deal that would create a $400 billion pharma giant, but has investors questioning the logic. Marriott fell 7% despite rolling out new AI tools, and eBay dropped 6% after a downgrade. Micron was also under pressure on China competition fears, though it managed to trim its losses by the close. The real story today was the hyperscaler rally. Amazon crossed the $3 trillion market cap mark for the first time ever, surging 4.5% on the back of blowout AWS results. Microsoft jumped nearly 5% after Goldman Sachs added it to its top picks list, and Oracle's 9% surge rounded out a massive day for AI infrastructure plays. Even Nvidia climbed 3% as investors shrugged off last week's concerns about AI capex sustainability. Volume-wise, Nvidia was the most actively traded name, with over 200 million shares changing hands. Apple was second, though it lagged the broader market, down nearly 2% on concerns about its AI strategy and rising memory costs. Amazon, SpaceX, and Intel rounded out the top five, showing that the action was squarely in tech. Zooming out to the weekly picture, the rotation is striking. Microsoft is up over 20% in the past week, Workday has gained 23%, and Garmin is up nearly 22%. Amazon's 16% weekly gain is a testament to the strength of its cloud business. This is a market that's rewarding companies with clear AI monetization stories. But the flip side is brutal. Roblox is down 26% on the week, Alnilam has lost 23%, and SanDisk is off nearly 22%. Vertiv, despite today's bounce, is still down almost 20% from last week's levels. ARM Holdings, KLA, and Micron are all nursing double-digit weekly losses. This is a market that's punishing anything perceived as overextended. Looking ahead, this is a massive week for earnings. We've got AMD reporting tomorrow, with analysts eyeing AI-driven upside. McDonald's is also on the docket, along with Constellation Brands. Wednesday brings Disney, DoorDash, and Shopify, while Thursday has Atlassian and more. And on Friday, we get the big one, the July jobs report, which could set the tone for the Fed's next move. You can find exclusive earnings transcript summaries on MarketSnap to get ahead of the numbers. Now let's talk about the macro backdrop because there's a lot going on beneath the surface. The big story is the coordinated US-Japan yen intervention, the first since 1998. The yen surged after the Treasury stepped in, and this is a major deal for global markets. It's a reminder that currency moves can have ripple effects across equities, especially with the carry trade unwinding. On the geopolitical front, oil prices plunged over 6% after Trump called off strikes on Iran and signaled peace talks. The Strait of Hormuz remains the wild card. If the closure extends into the fall, we could see crude at $175 to $200. But for now, the market is breathing a sigh of relief. There's also a brewing battle at the Fed. Chair Warsh is taking a more hawkish stance, and JP Morgan is now calling for a rate hike before year-end. The Treasury sell-off is accelerating, and some analysts are drawing comparisons to the late 1970s. That's a headwind that won't go away, even as equities rally. Sector-wise, the weekly picture shows communication services leading with a 3% gain, followed by consumer cyclical and defensive names. Technology is up just 1.5% on the week, which tells you how much ground it lost before today's bounce. On the flip side, utilities are down nearly 3% on the week, and basic materials have lost 2.5%. Energy is also in the red, despite today's oil-driven volatility. This is a market that's rotating away from defensive plays and into growth. One more thing to keep on your radar. The ISM manufacturing survey came in hot, with the index hitting its highest level since May 2022. But managers are complaining about pricing volatility that's worse than pandemic era. That's a double-edged sword. Strong growth but sticky inflation that keeps the Fed on edge. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown useful, make sure to hit that subscribe button and turn on notifications. We're here every day with the insights you need to stay ahead of the curve. And don't forget to check out our exclusive SWOT analyses on markets.